So this is a typical Chinese breakfast, and it's one of my favorite things to have every morning. The jianbing, or the Chinese pancake. It has eggs, cilantro, crispy tofu, really tasty. 师傅，煎饼一个，辣椒多一点。And to pay for it, I don't have to take out any cash. All I have to do is to trigger my QR code on my phone and scan. That's it. A taste of the traditional in the digital economy. When it comes to market size and speed, China is the biggest and fastest growing market for financial technology, or Fintech. How did China leapfrog more financially developed countries like Britain and Singapore? And can it be a role model for the rest of the world? This week, we are coming to you from the Grand Hyatt Shenzhen. I'm Valerie Tan. And joining me is Professor Christopher Balding from the HSBC Business School, Simon Choi, founding partner of Acme Arden, and Professor Whitman Hung, president of the Internet Professional Association. Welcome to the program. Let's start from the beginning. How did China get here?
I think, first of all, China went from a quite backward banking industry. If you remember, 10 or 15 years ago, they have some government-owned banks, and not everybody had banking facilities. Very little credit cards, very little banking accounts. So it's what we call the unbanked community. So when the fintech, early days when we have like payments, there's actually a need for that, because when e-business comes in the States, you can use a credit card. In China, how can you pay your e-business? So procurement. So that's why things like Alipay and WeChat Pay comes in.
I would add two things upon that. When I first arrived in China, what you really saw was everyone paying by cash. Even just taking a simple bank card into a lot of places simply wouldn't be accepted. And so as there's been this progression of technology, you've really seen a lot of these payment providers, Tencent and Alipay are the two big ones, jump into this space. I also think, building upon what he said about the banking system, what has really driven this has been the technology providers, not the banks. A lot of the banks are really moving into the space now, or at least being pushed into the space, where they just hold the money and everyone interfaces, whether it's for investments, whether it's for payments, with Alibaba, with Tencent. Those are the real institutions where a lot of people are moving much more to getting their financial services.
For me, I think that because of the rise of internet and also the e-commerce in China, actually the rise of the internet, with the people actually want to shopping online, and they find actually how to pay it actually there was another problem with the enhancement of how to do by the online payment, and we found that actually all the online payment actually is not coming from the bank yet. They're coming from WeChat or Alipay. Type of things that they have the fintech technology. Actually, the bank actually is lagging behind.
I hear you guys talk about how it's very commercially driven because there's a white space that is underserved. But let's not forget that the government had a huge role to play in this, because the government really promoted the growth of financial technology. Why is the government promoting them? What's in it for them?
One of those things, if you look at the history of China's reform, there's this common word called forced reform. So they actually use that. They use market force, they use the opening of the market to force reform of their old industries, whether it's manufacturing, whether it's retail. In this case, it's banking. So I think the central government at that time, I think they felt the unmet demand, they felt the insufficient ability of those state-owned banks to serve the large population, the large middle class that's growing. So they are actually, maybe giving a little bit of encouragement. It's not a lot. I mean, the fact they allow it to happen, I think is the encouragement. And then they let these fintech companies, or so-called internet finance companies at that time, to force the reform of the old banking industry. I think that's very important.
Well, I would add that I think if you look back 3 to 5 years ago, when these payment systems were really just an idea in Tencent Labs, the government knew nothing about it. I don't think it's fair to say that this was promoted by the government. Now it's promoted by the government. It's absolutely now promoted by the government. But at the time, I think the government was almost unaware of what was going on. But one of the things where I think you saw some very overlapping interests between the government and the technology firms was the government at the time, and I remember this very distinctly, you would go into a restaurant, and if you wanted a fapiao, an official receipt, you would have to get these, almost lottery ticket types of things that they would hand out and you would scratch off so that you could win money, because the purpose was that the government wasn't getting tax revenue because everything was in cash. And it's very easy to hide payments when you're in cash. And so there was this convergence of interests between the government and the technology firms, where the government could better track who was spending what was being spent where, and so they could say, wait a minute, you haven't paid your tax bill the way, according to our receipts. And so I think there's been a real convergence of interest, but at the beginning, this was not a government initiative. It is now, and they're pushing it, but at the time, it was not.
You brought up a very interesting point about, giving up their privacy in exchange for convenience. But can I just go back to what Christopher said about why the government see that there is benefit to the system is this point you brought up about monitoring transactions. Do you think that this is also one way the government can monitor the citizens? That's why they think that, okay, I'm okay with the system because it helps the government in monitoring the systems. Is that one way? That's why the government is promoting it.
I suspect that that's probably part of the, let's say, larger, longer-term plan. I think it was initially because, there was so much tax revenue being lost, especially by small and medium businesses. As I mentioned, these coupons, for the official receipts, fapiaos. I think that was the original intent, and I think it's clearly, moved beyond that. But I think the original intent was, this idea of tax collection.
The one thing is that, cash you cannot record, but all the electronic payment are recorded, all data captured by the government. That's the difference, actually. The government can trace everything using the online system, mobile treatment, electronic payment system. That's the reason why cash society and electronic society is different. The government can have a better monitoring of how the cash flow, how the money flow, and how to tax them.
I think it's probably a bit premature to speculate that the government already have access to those big data, because right now it's actually quite segregated. Tencent has its own data, JD will have JD's data, Alipay will have Alipay data, and still there are people paying by PayPal. There's still not a lot, but other kinds of payment systems. So for the government to actually say, oh, I will have everybody how you're spending, I think we're still far from that.
Really? But WeChat has said that, the government has access to their information, no?
I don't know. I'm not sure.
They do.
Even if they do, it's just WeChat, right? So if you want to see how women home spend, you have to monitor a lot of different systems to have a full picture. So I use credit cards, I use PayPal, I use obviously WeChat. Actually, I do not use Alipay, but I have other payment means. So you need to have a whole picture of a person. That's a different story. Now, if you want to monitor a company, a retail shop, for example, that's much easier, because you can actually you have the right to demand such data from them, and then they can. That's where the tax revenue recovery thing is coming. That's a much easier thing to do.
So on an individual level, you think the government doesn't have access yet?
I will doubt if they have full access, or you have their ability to actually aggregate this kind of multiple source of data to create this picture. And cash is still there as well.
What about this credit system that has been widely publicized and in the news? How does that work?
That's a new thing. I mean, I think what the government realized is that it's a lack of credit system. I mean, unlike in the U.S., when you have, kids have credit cards when they were in college, so you kind of build up the kind of credit history of every single person. Whereas in China, such a big country, people move from province to province, and there is not a common share of credit systems. So there's frauds, there's all kinds of things. It kind of increased the overhead, and therefore the cost of, for example, the banking and finance system. So that's why the promoting this. There's actually multiple providers or multiple players doing such credit systems. And also, I think the government is trying to promote that people should be integrity, should maintain integrity in terms of business transaction, and also in terms of personal, like borrowing loans and things like that.
你必须带着现金出门吗？
不带。
哦，不带，为什么呢？
为什么带现金？现金很少，基本上出差1个月能消费个100块钱的现金吧，基本上都是微信、支付宝。
一方面就是便捷了，省了很多时间啊，对吧？因为现在像我们是上班族的话，工资什么东西打在卡里，你直接绑定卡，什么东西都很方便了，一个手机就可以出门了。
One of the things that I found so interesting when I first moved to China is I was asking a colleague, I said high-speed rails and skyscrapers going up everywhere, and there's no credit system. I mean, one of the foundations of a financial market economy. Why is that? And they looked at me and they responded somewhat amusingly. They said it would embarrass too many people. And so one of the things that is very interesting about what you see going on in China right now is you see all of these different groups forming their databases or data sets or scoring systems and things like that, because a lot of the fights, and you see internet companies breaking up over this and litigation over this is over control of the data. Mm-hmm. Who owns the data? Who has rights to the information? And I think that's going to be a very interesting one going forward, because it presents an enormous loophole for consumers, especially, but also other firms. You know, if their data, if they're borrowing money from this company and this company has data on them, but that company doesn't know that they go out and borrow money from this company over here. Yeah. You've even heard of bankruptcy cases in China where banks both think that they're securitized by an asset, and then they all get in a room together, and the banks find out, oh, we're all securitized by the same asset. And so, and one of the things is that a lot of people don't realize is that the system, the data systems in China are actually incredibly fragmented, where in the United States and in most other places they're incredibly centralized. And so at some point that's going to come together. How that comes together very much remains to be seen, and I agree with Whitman that in a few years I think the government will probably have this totality of information. Right now, they don't. I mean, they can probably aggregate it from multiple different sources, but right now they don't have that capability.
But so far as I know that actually, say, China for the personal credit rating system, only 25% completed. So it's still a long way to be completed, say. And then one thing that we are very sure that's the bank are losing control of the big data. Because the Alipay, WePay, or that covers online payments, the devices, they capture all the spending, say, record of the person who use the e-commerce. And then we found that actually the bank actually losing the control, say who's buying what type of things, and then they're losing their company FH.
They never had, because people didn't have credit cards, so they never had the kind of thing.
But now they do.
Now
they have
some, because it depends on if you're using WeChat Pay or Alipay on small transactions, banks won't know. Only on the big ones, where it's about 5,000. Then you do it immediately. That's actually after the regulator have put this new regulation a few years back. Then everything above 5,000 you have to be a online transfer from the bank. Otherwise, you're just paying for your wallet. The wallet which is kept by Ali or Tencent. So banks won't know. I think if you look at big data, the fundamental of big data is high volume transactions. Banks don't have high volume transactions.
But in the past, actually, the UnionPay, they keep, say, all the records of people they're using, say, UnionPay. But now, actually, say, people do not use the UnionPay anymore. They use, say, WeChat Pay, Alipay. Yes. So the actual data collected by Alipay and WeChat Pay, they're not by the banks anymore. The system could not get the data anymore. That's why, say, the bank, they're more eager to work with, say, that covers, say, internet giant, or like the BAT, right, BAT, to have, say, share with them, all right? That's why the bank, they're changing attitudes. Because banks are too costly to develop their own product, all right, that will go in line with, say, the e-commerce system. And they want to, in partnership with, say, the e-commerce giants.
There are two schools also. I mean, some will do that because they don't have the time. I think it's not the cost, it's the time. And also, the internet thing is, most people only have 2 or 3 payment systems. You won't have 5 payment apps on your mobile phone. Right? You probably just keep one active electronic wallet. So once you're already on it, the bank has to either work with that provider or they have to fight very hard to win you back. But they are, fintech is not, let's face it, fintech is not just about payment. Payment is fundamental, payment was what kicked it off in China, but there are many, many other things. I mean, right now, at the beginning you were saying China is a leader. I wouldn't say it's a leader, it's probably one of the pioneers. I think there's no leader yet in the world. I mean, I've been to Singapore, I have some friends who do fintech there, London, both are fighting very hard. I mean, the B2C part was built by initiated, pioneered by payments. That's why it's there. The B2B part is yet to be built. And the B2B transaction, if you think about it, is much higher in terms of monetary value than B2C. So we're still far away. I mean, if you look at some of the banks, I mean, there are different kind of thoughts. Banks like Ping An, banks like China Merchants, they're doing a lot of their own thing. For example, China Merchants just did a blockchain fund transfer to Singapore. 10,000 US, but it was a breakthrough, right? Not through SWIFT, but through blockchain. So they're doing a lot of these experimental things, and that one, when it's done, that's the real B2B thing, right? When you don't have to go through SWIFT to do a international. Fund transfer, that kind of, if there are a lot of these banks exploring into, for example, trade finance. I see there's a huge potential in trade finance based on blockchain. Because if you think about it, the current trade finance system based on LC and trust receipts and things like that was created, 500 years ago by the Dutchmen and the Englishmen who were selling on sales ships, like writing with inks. Not, the bill of ladings, these kind of things. Now, these kind of instruments are no longer very popular with e-commerce. People are sending parcels from SF, sending out their payment using online payment systems. You don't need LCs. Okay, when you see people like SF, which is a big logistic sort of provider, they are doing what they call logistic finance. Supply chain finance. What they do is they lend money to people who deliver parcel for them. You think about it?
Yeah.
So bankers are losing their lunch to the delivery boy.
Yeah. But you point out a very interesting point here in China is like, even though it might not be the leader in terms of technology, in terms of regulations, but when it comes to like adoption, when it comes to market, China always leapfrogs everybody else, right? I remember talking to my Chinese friends why they're so hungry for fintech or going cashless is because there are fake notes everywhere. So this is really beneficial to the society. This has really helped them in terms of like improving their lives in a way. But my question is, why, going to that point which Simon pointed out, is we know that somehow or another our transactions online are being monitored. But for the Chinese, they're okay with giving up that privacy. My question is why? Why they're so willing, as compared to, say, their counterparts in other countries. There was a report that I read that for the Chinese consumer, they're only willing to pay $4.50 to protect their data, whereas a German is more than willing to pay $150 to protect their data.
I'll tell you a story. A few years back, 2013, I think, I visited Estonia. And then I was chatting with them. They have very advanced electronic payment and electronic government. Everything's linked. Okay, using one mobile ID, you can link to your bank account, your tax account, of everything. So I asked the government, I think it's the Minister of Information Technology, said, what about privacy? You know what he said? He said, Mr. Hong, let me tell you, Google knows more about you than any government in this world. And I thought, really, you're right. So I think it's ignorance on both sides. The ignorance of Chinese consumers who may not pay attention to privacy, and the ignorance of Western consumers who believe they have privacy.
I think there's a couple of things. First of all, in China, just sociologically, the concept of privacy almost doesn't exist. You're always surrounded by people. You're always crowded. You go down in the garden, you walk to the mall. There's always just astounding amounts of people. politically. You know, people just take it as a given that the government is always monitoring, no matter what you do. You walk down the street, there's cameras everywhere. You know, there's always a permanent record of everything you do. It's just taken as a given. So the idea of, you know, well, I'm going to protect my privacy is almost, you know, it's really foreign. And so there's almost like, why would I even care? Because they're gonna be watching anyway. So I don't think it really matters to the Chinese consumer.
So actually, I think we have the corporate country in the world, and then I never expect and never think that Chinese enjoy privacy at all. Actually, you go to your bathroom. Actually, it's a public bathroom. You go to a doctor. Actually, it's swarmed by other patients, right? That you're consulting your doctor with others, all right? All other people that so enthusiastic to know what happened to you. So that's the difference actually between China and different. But actually China is going more concerned about the privacy is correct. It is on the rise, but actually it's not so on the high level that people is that, oh, it's my privacy, sorry that you cannot infringe my privacy at all. Not to that level. And China actually they were willing to explore themselves because in exchange of faster system. All right, that's important that China is different from others because we're different from different cultures and different value on different things. And that's why the Western society they cherish a lot of privacy because actually they use a lot of money or cost or effort to protect the privacy, while Chinese actually sorry that all right we are in the really at the very initial state of what's meant by privacy, what's meant by that, all right? How to define it, all right? We are actually monitoring. You drive a car actually in Shenzhen, actually when you stop any traffic light, actually your car will monitoring that. Every time, everywhere, you use the Baidu, you use the Google, actually know that the way you are driving your car, how many lanes you are changing too fast, they all know it. All right? So that's the reason that you call a taxi, your Didi or you Uber, all right? Actually they record all your driving behavior. You say, is it the privacy? In the modern life, actually you cannot, all right, protect your privacy as you thought. That's the difference, actually.
That's the modern paradox here in China.
Yeah.
Not just China, actually in the world.
But the whole world actually the same. Baidu know you better than, Google, I think, in China.
I hope not, but okay.
In China maybe, but in the world, I mean, Google definitely knows. That's what I said. I mean, a few respect, they said Google knows more about me than any government in this world.
Yeah, because what do we do with all this data? And on that note, let's take a break. Well, China is a trailblazer, and this is something we've talked about. Can China be a role model for the rest of the world? That's coming up next. Can China be a role model for the rest of the world when it comes to financial technology or fintech? Welcome back.
I think to a certain extent China can be the role model, but it cannot be the only role model because each country has different maturity. Each group of consumers have different behaviors. For example, in the States, they still use personal checks. Okay, in Estonia, they haven't been using checks for 15, 20 years. You know, in China, there was a big group, what we call unbanked or uncredited card community. That's why mobile payments and all this kind of new financial technology be widely used by the consumers. So if you want to do the same thing in, for example, Indonesia, it probably work. But if you do the same thing in the US, it probably won't work. But I think what can be learned by the world on how China deal with the fintech is the regulators, how they regulate it. You know, the two schools of thoughts. On one side, what I saw is regulators will say, okay, this is fintech is nothing new, it's just a new technology. It's just like ATM, just like email. So we will regulate them as if we were regulating the current banking providers, the current financial institutions. The current rules will still apply. If you are within these rules, I'll let you do. If it's not, sorry, you can't. China had a different way. China, if you think about it, China has been on continuous reform since 1978. So there is a good habit of both the consumer and the government saying, okay, whatever is not exactly legal today, we may review it tomorrow, and the day after tomorrow it may become legal. So they're very accepting to these kind of new things. If you look at how fintech developed in China, it was they first had the fintech, then the regulator knew about it, then they were just still monitoring it, then they started to regulate. But when they regulate, they talk to the providers. They will say, okay, if I do such kind of regulation, will it kill you? If it will, let's think about it. they will do very kind of cooperative and kind of way. Of course, they are the
Almost
banks.
like trial and error.
Trial and error, and so the regulators are. Because another thing is, of course, in China, the lawmaking process is much quicker, and it's not just the law; it's just regulators. It's like regulations. It's much easier than they have to pass, like say, the Parliament or the Legislative Council in Hong Kong. So it's make it much more flexible for the administration to say, okay, I close monitoring. Something goes wrong, I put it up tomorrow. Be like ICO, right? When they saw something wrong coming, they immediately put a notice out. Sorry, it's illegal. Yeah. Okay, and it's one day, they just ban the whole thing.
Of course, that's cryptocurrency, which is still very new, especially globally as well.
It's
not just
laundering
China.
and all kinds of things. In other countries, some say, well, let's watch. Okay, some say what? Some say from day one, no, it's not within the current regulatory regime, therefore it's illegal. So it's all kind of way. I think what we can learn from Chinese regulators is to, kind of, the Chinese say, touch the stone to cross the river. Okay, slowly watch it, but move, not just stay.
And I think there's also, as he was saying about different countries growing up differently. In China, there's a very unique convergence of facts. And what I mean by that is, if you look at Alibaba, for instance, they have about a 75% market share in online commerce in China. And if you look at Tencent, I think the statistic is roughly 65% of all time spent online in China is spent on a WeChat platform. Okay, so it's no surprise that those two companies are the ones that have the dominant payment systems. I don't know of another country anywhere in the world that has online market players with a market share anywhere near that size. Okay, so you have much more fragmented markets everywhere else in the world. I mean, we talk about Twitter, and I think Twitter has 300 million users globally. So even in the United States, they don't have remotely near the market share. Even Facebook doesn't have nearly the market share that Alibaba and Tencent do. And so there was a very unique convergence of facts. And so a lot of countries are going to have to say, hey, how do we incorporate these new payment systems? And I think one of the things that's also important to remember is in China, because you use WeChat everywhere you go in China. A lot of people, instead of business cards, they now have like an official account that they just say scan my WeChat. So I think you're seeing a lot of these evolutions taking place, and there's all kinds of different ways that fintech is really changing. Payment, investments, all kinds of things all around the world, and it's going to be that evolutionary process where countries discover what works for them.
Yeah. I mean, China, like you said, has a system which actually allows this to happen, because this is a system that has certain characteristics unique to China. Wouldn't you agree, Simon?
Because of huge population, and then say one single language, culture, same culture, is easy, and then it's easy. But the thing is that, say, how the fintech in China can go global, say, how the payment can use globally, we have to match a lot, say, other, say, international, say, payment system. Because, say, what we are doing that, like UnionPay, all right, the Chinese tourists, they're going out to our China to buy things, they're limited to the Chinese tourists only. They're doing their Alipay, WeChat Pay, all right. That kind of payment, actually, say, they're used by the Chinese, they're going out of China. They're not welcomed by the world yet, all right. Say, so that, say, there's a long way to say, how come the Chinese, say, payment system can influence the world? I think they say Alipay, say, WePay, that kind of thing should be how to cooperate with the international player, and then they can cooperate. They work out a special model that say, so that say it's so big that they cannot fall, and then all other countries have to follow. Not at this stage yet, but say they have to cooperate with the international player. How to penetrate to the payment system first. Say, if without this, all right, it won't be success. It will only be limited for the Chinese to go abroad only.
Simon, if I can, I was in Paris about a week and a half ago, and you can pay for metro tickets with WeChat. Okay, in Paris. Okay, there's advertisements, and you walk right up, you can scan it, things like this, so that they are using it for these exact types of things, where Chinese citizens can go abroad and use WeChat overseas.
Yeah, but I can't use my Alipay overseas.
Yes, absolutely.
Because I'm not a Chinese citizen. Yeah, so...
Because it's, they haven't launched it in Singapore yet. Once they launch it, you have a local account. For example, in Hong Kong, you can. But it's a two separate two separate wallet, because China still has the foreign currency control. So I have a mainland Chinese WeChat account that's linked to a mainland Chinese bank account for me. But then if I open another one using my Hong Kong account, these two accounts can't transfer right now. But they will, I think, eventually.
Yeah, it's two systems. You can't really have two systems meet each other because there are two different banking systems as well, isn't it?
Well, as I understand it, what I was told in Paris was a Chinese citizen can use, because there's, it's linked to their ID card and things like that. So they can use WeChat in France, but I as a foreigner can't use it. Similar to what.
Yeah, same as me actually say when you go to Hong Kong, you say Alipay to pay. Sorry that say you're not PRC citizen, you cannot use Alipay in Hong Kong. So actually say I link it with my my documents, all right, in China. You can use it very well in China, but actually outside China we cannot use it because actually we are not say the mainland Chinese like you, right? Say actually say you can use the WeChat to buy say a train ticket in Paris. Because you're a foreigner.
Yes.
Be the same thing. Actually, still saying that the Chinese going abroad, all right, they can use the WeChat Alipay system very well.
Which brings me to my next question, though. Because of the different banking regulations that we have in more financially developed countries like Britain and Singapore, are these markets then able to adopt this model, this cashless model that China has? Or is it because they're too saturated, too mature already?
Singapore just launched this thing called Pay Now with 7 banks that you can pay using a mobile phone, and I saw it's a very simple PowerPoint presentation, but they said they are better than Tencent and Alipay. But anyway, yes, you can pay somebody by just knowing their mobile phones. But this thing will only work in Singapore because it's, it has to link with the Singapore mobile service providers. So I don't know how far it can travel. But I think what will happen is, I'm not saying that one day Alipay or Tencent will dominate the world as when they dominate China, but there are different electronic wallets, and there can be it's like banks, okay? Electronic wallet exchanges. Right now, China is building them. I think in the future, in the world, there will be an exchange, whereas because in Europe there are different already electronic wallet providers, and once people are used to using it, they won't switch. It's very hard to switch. And it's linked to their local bank accounts. It's their own. I mean, in the internet world, yes, everything's global, but everything is also local when it comes to consumer behavior. So I think what I envision is that there will be a global exchange instead of a global payment system.
And I think one of the key things to remember about any technology, not just payment systems, not just fintech, is technology just opens up opportunities. We haven't done away with the landline phone. We still have landline phones. We haven't done away with TVs. We still have TVs, okay? But now we can watch TV programs on our phone, on computers, on TVs. We can call people on the internet. We can call people on our phones. We can call people on landlines. There's all these different things. And it's the same thing with payment systems. We will probably, I know that there were apps where people could split restaurant bills and they could, easily before. So all of these payment systems and similar financial technology, we're probably not going to see disappearance of cash, okay? If there is the disappearance of, physical cash, we will probably see an increased amount of cryptocurrency where people can, let's say make more anonymous transactions. But what it's probably going to do is open up the range of opportunities of how people pay. I can just, wave my card near. I can transfer you with a phone. I can make an anonymous crypto payment, things like that. So technology is just opening up the range of things that we can do. It's not going to disappear things necessarily.
Therefore, I think that say different payment system, eventually some of them will disappear because they not used by the user anymore. But say, how come say the China say e-commerce say giant or the fintech can influence the world? I think actually say we found the two systems. China's system cannot go globally. Say it means that they cannot go through. Say it means Chinese cannot go with foreigners. The foreigners actually in Paris, in France, maybe they have their own system developed by Tencent or Alipay that used for the French people nationals. Or the Chinese using our own set system, they're using the old system based on our WeChat system or Ali system. That kind of thing will be, say, more regionalized rather than, say, globalized. Until the day that, say, China has no exchange control system. With that day, all right, say, China have no more exchange control, all right? And then that will be all gone through. I think that day will come one day, but not so far in the future.
if we could talk about China being a trailblazer, I know we've been talking about mobile payments. What about areas of wealth management? What about areas such as risk management? This is an area that China, when it comes to financial technology, is still very much lacking. Will China open up to the rest of the world when it comes to sectors like that? Because it does want to be developed in terms of financial technology.
I think wealth management is a growing industry in China. I think whether you will open up, that is a very big question, okay? But however, if you look at even the world in terms of fintech in wealth management, I haven't seen much yet. So it's not just China, but everywhere else. In terms of, you say, risk management, I think now we just talk about the building of the credit systems. In terms of risk management, it's growing there. It's not that difficult once you have a technology. I mean, the difficulty is more about collecting the data and making everybody disciplined enough to use it. But the technology itself, it's not that difficult, I think. And China already has it. A lot of banks already has it. Whether it's really widely used is because, you know, do you have enough data? Do you have the kind of staff trained? Do you have the discipline for both the staff and the consumer to attach to such risk control?
I was hearing a representative from a major institutional asset manager talking one time about how they interacted with their customers, and they said, when we benchmark our software and our apps against, let's say, Citibank or HSBC, et cetera, he says, we do great. He says, but when we benchmark ourselves against Google, Facebook, you know, Twitter, he says, we do awful, because we don't provide that level of, you know, customer interaction that they feel they understand and are going to use the product. And so one of the things that I do think is happening is there is this revolution of tech providers that say, wait a minute, we can also very easily do financial services. And so one of the things that I think you're seeing is, and I think you're at the very, very early stages of it, whether it's P2P lending, whether it's asset management, all of a sudden you're seeing people saying, wait a minute, why can't I just get it on a phone where maybe there's a facial recognition scan in there and I have a simple menu of choices rather than trying to deal with my bank and there's, you know, all these different things that I have to jump through. And this is clearly presenting, as Whitman's pointed out, regulatory issues, because the market in China is moving at light speed and the regulator is a turtle, and there's this constant catch-up, so there's a big gap between those two. But you absolutely see that customers are saying, wait a minute, why can't I get it on my phone in a simple, easy-to-use app rather than, you know, having to deal with a state-run bank?
All these are possible because of the smartphones.
Yeah.
We have to remember that. So when we think about it, because smartphones are also getting cheaper, it helps people, it makes their life more convenient, it makes their wealth management better, it makes risk management better as well. So what happens if you don't have a smartphone? There's this wave of fintech technology. Also, will we also see a population of people left behind, people who are not able to have smartphones?
And I think what is so interesting about this is that we talk about things that are very much on the cutting edge. But one of the things that you hear from a lot of these poor countries is you have farmers that are checking market prices on their phones through some type of like group SMS or something like that. So even at, you know, very low-grade type smartphones, people are using this. You know, rural farmers are using this to stay up to date on their markets and things like that, and to make money and make better decisions. So they're seeing it as a valuable tool. You know, you wouldn't have 70, 90% smartphone penetration in Myanmar unless people were saying, wow, I'm getting value out of this. And you even have low-grade smartphones that are selling for, you know, maybe 1 or 2 generations old, you know, $75 to $100. Yeah. So I mean, I was in India a couple months ago, and you know, you had Oppo and Vivo and Huawei. I mean, they were everywhere. And people are getting distinct value out of this, even rural farmers. You know, we're talking about very different.
And if you look backwards, I mean, a few years back, I saw, I can't remember, it's Kenya. It was one of these African countries, and they're using SMS to do money transfer. It works very well in that country where they have no bank branches. So basically, you're using mobile service providers as your bank. Okay. So I think the same will happen. There will be ways. I mean, technology is helping people to improve their life, not preventing them from getting what they need to.
So there's no concern that we will see a bigger rich-poor divide then?
No, the thing is,
No.
well, I think is there are two things there are two sides of the coin. Number one, if we do not have, say, a smartphone, the life is very peaceful. And then because actually you need to be active to the smartphone, checking all the messages all the time, all right, you have peaceful life that you enjoy. Especially for me, say Saturday and Sunday, actually it's a no phone day. And then the things that actually luckily we're in China, say all actually say the smartphone say manufactured in China. And that's why say we have used a very low cost to receive a very high grade smartphone. That's why China say has a very huge penetration of people using smartphone, more than 60% already, the whole population. And then you can see, all right, say we tip, all right, the hawker, we tip the baker using say WeChat. Say you cannot imagine that, all right. Actually, say in the country here, that say there's no need to have cash anymore. So without say a smartphone, actually you cannot live because number one, you don't know how to buy, say your fast food. You don't know how to have say to pay a couple of Didi or Uber. You don't know how to get out without anything. You don't actually say without say a smartphone in China, you cannot survive well.
I was involved in closing the digital divide for a long time, since the year 2000 in Hong Kong, and we did a lot of things like seminars. We're forcing public utility companies and governments to make their website more accessible, using global standards and allowing, for example, visually impaired person or hearing impaired person to be able to use it. But what I'm saying is, these days those things is no longer a problem, because you have voice control over your phone, you have such easy to use user interface that even the illiterate can use a pictorial pad or phone. So I think today the kind of digital divide that we were afraid 20 years ago, I remember we were with the UN and we were really thinking about how to promote closing the digital divide. Maybe it's no longer there. I'm not sure. I wouldn't say it's no longer there, but maybe it's actually disappearing, because you already, you don't have to develop the software for that, because iPhone comes with it. Okay, you can voice control. You can listen to everything listen to every text, and everything's in picture, which is such easier. I think what I like is technology is really helping people, in terms of accessibility, in terms of understanding the world, in terms of the feeling, in fact, of the world.
And I think one of the things that is so important is, especially in China, is it's giving people lots and lots of choice. Mm-hmm. I mean, a decade ago, you basically had the big four banks. A lot of this technological revolution, this fintech revolution that we're talking about, is because there was a demand for consumer financial services. I have money now. Where am I going to put it? How am I going to pay for it? And so a lot of this has come out because the state-owned banks were such dinosaurs and never changed, that you saw all of these other companies sweep into this void, and people have been so starved for these services and technologies that they've adopted them en masse.
The thing is how people use a financial service. In the past, actually, people cannot enjoy financial service without the fintech. But now they actually say, in the past, we go to the bank, and now the bank goes to you. Difference, all right? The bank's on my hand, on my palm already. This thing changed. Because actually say, habit change, because technology change, because internet. Without internet, actually it won't be successful. So all of that actually coming from internet.
And on that note, thank you, gentlemen. That was a very interesting discussion. I guess we can only wait and see to see what the future holds for us when it comes to financial technology and the cashless society. I'm Valerie Tan, and that's it for this episode of Between the Lines.